Hello, I'm Greg Bell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights that'll boost your trading potential. Coming up, markets are in wait-and-see mode as the Fed kicks off its two-day policy meeting. Investors watching for clues on interest rates and economic guidance. Plus, Paramount has taken the gloves off, going hostile in its bid for Warner Brothers Discovery, setting up a head-to-head showdown with Netflix for control of the studio. And that's not the only battle on the horizon. Will Broadcom's strong AI and infrastructure pipeline sustain momentum, or will investors question whether valuations are stretched? Our trader debaters standing by on that one. They got both sides of the story. Don't forget to like and subscribe. You're watching TD Active Trader Live. A little over half an hour into the trading day. Sorry for the delayed start of the broadcast. The machines. I'll blame the machines. Let's check in on the S&P 500. We got some modest green on the screen. There is a cautious sort of feeling out there, a vibe, isn't there, from yesterday to today? Because, of course, we get the Fed rate decision tomorrow when they come out of that two-day meeting. The market's thinking you're getting a cut. There's really all that uncertainty around 2026. Who's going to lead the Fed? What will policy look like? What do the people around the table right now think policy is going to look like? A lot of intrigue and, understandable, bit of caution in the markets around that. I want to jump into the heat map. I haven't had a chance actually to catch up to the heat map myself. I want to see what is going on here. It is not tech that's putting a bit of that green on the screen. NVIDIA, Microsoft, Broadcom, we're talking about them later. Apple, Google, nothing too dramatic, but all just slightly in the red. I want to check in on a few names today, including Brookfield Asset Management, their New York listing. Some interesting stuff here. It's about artificial intelligence. Brookfield, BAM, and the Qatar Investment Authority teaming up on a $20 billion venture to invest in artificial intelligence and infrastructure in that region. Brookfield making this investment through its newly launched AI fund. It aims to mobilize as much as $100 billion of investments globally. You got a bit of a move higher in Brookfield Asset Management shares of the open today. And Ares Management, the stock jumping about 7-8% at the opens following the announcement that the alternative investment manager is going to join the S&P 500 effective on Thursday. We all know, of course, that when a name gets included in the S&P 500, all those funds that track the index, well, they got to buy the name because now it's part of the basket. They're going to take Kellanova's place because they're being acquired by Mars. And that's your market update. Joining us now for more technical take on what's happening out there in the markets is Jason Natick and Brian Rogers from our TD Direct Investing educational team. Welcome to the show, gentlemen. Welcome back. Brian, you guys can't fool me this time. You are here in this week, but you stayed in Jay's chair, and Brian is Brian. So I've got it all sorted out. So I will look to you first for guidance and wisdom on aluminum.
We are going to talk aluminum, and now just to say, aluminum, this is certainly not gold, especially when you consider. I just like to think about how things are quoted. Gold and silver are quoted by the ounce. We're talking aluminum, it's quoted in the 25 metric ton increments. So when we're thinking about prices, there's certainly that to consider.
Thank God, can you imagine what aluminum foil would cost you?
Oh yeah, bankrupt. No doubt.
Every fish dinner on the barbecue.
Yeah, but even though when we're talking about quoting size, it doesn't mean that aluminum is no less relevant and doesn't have a lot of important use cases. We're talking construction, electronics, aerospace, automotive, right? I know there's lots of change in that space, and many of the kind of high-profile renewable technologies really rely on amongst many things is aluminum. But aluminum, what I wanted to notice, we're not trading futures and on the platform, but it's nice to look at here. But aluminum is trading near 3-year highs. We haven't seen it crack the $2,900 per contract since May of 2022, and to kind of avoid themselves from. Tariffs got increased from 25 up to 50 back in June. Thinking about the Canadian market, a lot of Canadian products were exempted by USMC, but there still seems to be tariffs being applied in many of these situations. And Canada is the biggest supplier of aluminum to the US market at over 50% of their needs. And then taking a look overseas, kind of one of the interesting things is and this could be more negotiating tactics from another tariff perspective, but China is imposing export restrictions restrictions on how much their actually production caps. It's 45 million tons, and they've not yet reached that in terms of their production, in terms of their economy, but it's projected to hit that in 2026. So that really could limit supply in the market, really putting more pressure on the price of that. And then the next thing, just really just as a throwaway here, not a throwaway, but as just to leave it with everyone, a little food for thought, is one of the biggest production costs in bringing aluminum and getting those supplies up to the market is energy costs. It's expensive to heat your home. Well, guess what? Energy is 34% of the cost of aluminum. So as that rises, you're going to see that impacted on the cost there. But we don't have aluminum quotes, and I dug vigorously into the market. There's no aluminum ETFs out there as well. We've got a proxy. We're going to take a look at Alcoa. I happen to have an Alcoa chart up here. They certainly haven't been experiencing the run up in their price that aluminum has been. We can see that they've been trading down more or less over those particular times. But we need to keep in mind that aluminum that Alcoa would be using, it's U.S. aluminum's trading at a premium because of those tariffs. Even domestic aluminum saw the price bid up, just to match those tariff imported prices as well. But lately we can see the stock has been trading on quite a bit of an upturn here. Fairly tight range that we've seen here. What I've noticed here coming into that caused the breakout of the range, we've got a double top that formed, but we've seen these other kind of next stepped resistant bands that are kind of clearly in place at $45 and $55. As we kind of lead into here, we rejected off $45. The next kind of area of interest for me is if are we going to pull back towards that trending band, and oftentimes that'll be another re-entry signal if folks are seeing that if it rejects off that and continues higher. Otherwise, we're going to be looking for that trend to kind of reestablish itself in the next coming days and weeks.
All right, interesting stuff there on aluminum and Alcoa as our proxy. Also, we got a big fight when it comes to control of Warner Brothers Discovery.
We sure did.
Netflix won it. Paramount saying, we're not just going to lie down on this one. What are we seeing?
No, this is definitely a roller coaster when we're talking about kind of high-profile media assets that are out there. We've already seen some consolidation that's happened earlier in the year, but this is certainly a big one. We're talking big dollars. Warner Brothers Discovery had already made it well known kind of earlier in the summer that they're open to be acquired, and Netflix was the apparent bidding winner last week. Big deal, $72 billion, which came as a bit of a surprise to the market because Netflix has not typically been, they've grown through organic growth, and even their CEOs. But alas, they did come to an agreement with Warner Brothers. So once again, $72 billion. But Paramount wasn't going to be taking that lying down. They came out and with a larger offer in a hostile takeover bid coming out this past Monday. So yesterday, topping Netflix's price from $72 billion up to $77.9 billion. We're just throwing an extra few billion on here just to kind of sweeten the deal.
Sprinkle it around.
Right, for sure. But now. Paramount, as we were talking before the show, they're looking to acquire the whole company. We're talking about their cable assets as in front of TNT Sports as well as CNN, whereas Netflix was not interested in that part of the deal. Now, we're talking. Warner Brothers has acknowledged that they've received the tender offer. They do have a 10-day period to kind of come out and kind of re-examine and think. But they've mentioned that they still are in support of Netflix's tender. They'll just be putting that to shareholders. Now, one really interesting fact is that if Warner Brothers does walk away from the Netflix offer, they owe, we're going to throw out some more billions here. They owe $2.8 billion in cash back to Netflix. So there's a bit of a poison pill that's in there as well. But jumping to the charts here, I've got this kind of laid out from us. As we can see, those when it became well known of the potential for consolidations, there was big bullish moves on here. We've got a bullish flag pattern that formed through September. It's a continuation pattern that once we break out the top side of the flag, we can continue to see a sharp increase over a period of time. And as we can see, that channel did continue, and then we got some additional gap ups as we related into the end of last week into this week. And just to kind of throw it onto the screen, we've got the per share amounts in terms of both Paramount's bid as well as Netflix's tender offer. So we can see that the prices are going to be resting kind of around the Netflix prices, but time will tell. The window's pretty short to bring this through to fruition. But the last kind of little kind of road bump will be some of that regulatory and approvals. I know President Trump has already come out and said that he'll be personally involved in this. We'll wait to hear more in the press of what that specifically means. But the drama's not over here.
Well, it's a drama to come. Whoever wins the battle is probably going to make a movie about it.
Yeah, that's definitely
it. Very handsome people to play them, right? So I want the most handsome actor to play me. Eli Lilly, what are you seeing here?
Well, I don't know if there's as much drama over there, Greg, but there is you've all heard of the GLP-1, the drugs, the diabetes drugs and so on, but Eli Lilly, I was interested in that because it's one of the juggernauts in the market. It's the maker of several type 2 diabetes drugs, probably the most that are out there on the market. It was a star of the show back in October. I know you guys did talk about it, and it exceeds $1 trillion. It goes back and forth around that $1 trillion market cap. But they recently had some news. There was an FCA approval of Zepbound for treatment of some forms of sleep apnea, which you hear a lot about that these days as well. And it also recently announced Mounjaro is added to the state-run health insurance for China. And it's one of the approved drugs for treatment of diabetes in China as well. So obviously a massive market they're potentially entering as well. So just taking a look at the chart, I just wanted to show they ran over the $1,000 barrier on the price scale. You can see they did run up, and they hit a high of, it's interesting, it's $1,111. So maybe that was a psychological thing as well. Yeah, the 1111. And then it came down after that. But it did break just recently, just a few days ago, broke below that 1,000. So that's another barrier that, we could have seen some weakness where it would drop even further. So we're watching that right now to see where it's at. But it looks like it just jumped more recently, a little bit above that. So it's an interesting stock to watch because you have a couple things. There's an ascending channel here that's been over the last year. It's been kind of ascending over time. And then also, if we look at support and resistance, it's from a short-term basis, I think that $1,000 is a key one where there's that resistance around 1,030 is what I've seen. And then also, like longer term, you're looking at about $800. So it's one to watch where there could be some big fluctuation. There's almost like a double top forming here, if I can pull that up. So it hasn't yet, but it's a potential there. So you can watch it and see if it does start to get up to that new high again. That's usually a very bearish signal when you have that double top where it could come back down to 800. So one could be opportunity short term, but then one to watch longer term for falling possibly.
One of my favorite things about all of these drug manufacturers is the names they give they're so good.
Yeah, I don't know where they come from. But there's some interesting names.
I think the marketing think tank, they're all just they probably got a whole basket of names just waiting to get thrown on. Because if you look at the scientific names, even as strange as some of those marketing names sound, they're easier to pronounce. At least from a TV show's host point of view. Thanks for that, gentlemen. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website, where you can try the platform risk-free by opening a practice account. You just click on the Try TD Active Trader button. When you're ready to switch to a live account, simply export your workspace and start trading for real. It is time now for Trading Debating, and this week the stock in the spotlight is Broadcom, a company that makes some pretty important computer chips that help devices connect, communicate, and run powerful tech like artificial intelligence. Before you get going with that debate, gentlemen, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk. It may not suit all investors. Significant losses are possible. So it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now let's get back to the stock of the hour, Broadcom. What made you guys pick this one? Jay.
This is just another AI opportunity. It's one of those things that's the AI trade is never going away. There seems to be countless billions being thrown around and passed around the industry. So this is another key player. They've got some key business dealings with some of the big companies in the space. Lots of Mag 7 is involved with Broadcom, so this is an easy one to kind of pick and choose to debate for.
Brian,
for sure. Yeah, I think the AI snowball keeps getting bigger and bigger and bigger. And Broadcom is a good one, like Jason said, a key player in there, one of the top names that comes up all the time. And I was wondering on the AVGO, I don't know why they have that symbol. I looked it up. They used to have I forget the name of the company, but there's another company before they acquired Broadcom, which was like a Venjo or something like that. But that's where it stuck. So no, it was they bought Broadcom later on. But then I think the fact that they bought VMware. So there's all kinds of acquisitions in this industry. So that's been a big catalyst for them. So that was another reason we thought we'd take a look at Broadcom.
Thanks for the ticker trivia, because that's one that always gives you problems, right? I'm looking at the heat map and I'm trying to tell that NVDA, well, that's NVIDIA, MSFT is Microsoft, AVGO, always your brain would like click for a second. So
yeah.
It's been a trivia for me. So we'll get the time on the clock. We got the bell here to keep you honest. You get the 2.5 minutes each to make your case. Then we're going to, counter. So you always draw from the hat. Brian got the bull case. Why don't you kick things off?
All right. So Broadcom, AVGO, which is that weird symbol, is affectionately known in the marketplace as the AI infrastructure powerhouse. And what that means, when we looked a few weeks ago at Marvell, which is a similar idea. I had mentioned on there that the infrastructure idea is the idea with these data centers and these hyperscalers, that some companies have just the semiconductors, which Broadcom was before. They were only like a kind of standalone, did semiconductors, which is a very cyclical business. But now they're more into that infrastructure piece. So they're actually getting into the, I mentioned earlier, is the brains is like the actual chips. They're now into that nervous system.
You gotta plug the chips into something, right?
Yeah. So they have that business, which has a lot of income coming in on a continuous basis. It's not very cyclical. It's very steady. So that's one big thing they have going for them, supporting the data centers. They have super powered fundamentals. They're among the highest gross margins in the semi industry, with very healthy free cash flow, allowing for flexibility for them to reinvest for research and development going forward. So they have that major cash. And there's Wall Street confidence. There's AI tailwinds. There's a lot of cash flow that they have. There's margins that I mentioned, diversified business lines. So the fact that they have, they can do cloud computing, they have semiconductors, they have this VMware acquisition, which is more of a virtual computing company. And just that strong analyst sentiment is there as well. So the analysts have it as a much higher price target than it's at right now. Around that 435 range is what I'm seeing. But if we jump into the charts, you can see here that I have, there was a symmetrical continuation triangle. I know big words here that they love in technical analysis, but really what it is, it's when there's lower highs that are paired with higher lows. So that's kind of indicating that's going to be a reversal to the previous trend. There was a previous uptrend and it kind of dipped down. And you can see that did happen, where it's gone more recently to a high. And if I show here as well, we have the price did cross just a couple of the moving averages, the 21-day and the 50-day moving average. You can see that here in this section. So it's been up and down a little bit lately, but then also with the MACD, I have to actually, let me grab the that indicator down at the bottom. If we have the MACD showing, you can see it did cross, the signal line did cross the MACD did cross the signal line here, you can see, and that was on huge volume. So huge upward move on strong volume. The MACD crossed the signal line and both support the increasing strength for the price. So if you can see that there was a big volume at that time, that's a pretty good signal on the bullish side.
You like time life perfectly.
All right.
Yeah.
Okay.
I had to hold back, Greg.
You're waiting for the counter to really get rough. All right, Jay, what do you got for us?
Yeah, okay. So taking a look at AVGO, their trajectory is going to be really tightly linked to a number of key factors that all need to kind of work out in their favor. They need to continue this big spending from large customers. They need smooth integration of those acquisitions that there's some concerns about, and they're going to continue to see favorable regulatory, right? As as AI becomes more omnipresent in our world, you can bet that there's going to be some regulation down the road. And AVGO needs a light touch of government as opposed to something more heavy-handed. If any of those pillars falter, we could be in line for some significant pullbacks. Now, there's two main threads that I kind of want to pull on here before we jump into the charts. The first is around it's nice that you've got these nice deep-pocketed friends to continue to buy your products from you. But when we're thinking about diversification, this is certainly not what's making up Broadcom's balance sheet. 40% of their products come from five main buyers, and that's actually up from 35 the previous year. So this concentration is becoming more concentrated for the hyperscalers. We're talking Meta, ByteDance, Google, Apple, and there's a mystery $10 billion purchaser that's out there. But if we take Apple as a stand-in here, they make up about 20% of the purchases coming from there. Right now, Broadcom does play a crucial role in their Wi-Fi and the network chips. But guess what? Apple's very deep-pocketed, got a big research and development. Guess what they're planning to do? Within 3 years, they're looking to be off of external chips and working all from in-house. Now, I want to talk about leverage because I think that's a big risk to where we're going, but we're going to save that for the second half here. I wanted to go to the charts here. I want to highlight for what we see here on the chart. I'm always just looking for patterns, things to repeat themselves. What happened the last time we gapped up on earnings back in Q4 2024? We got a substantial pullback, almost 43% over the last time we consolidated for a little while and we pulled back. Same thing, we've got a consolidation coming out of the most recent earnings. Could we be in potential for a pullback? Yeah, sure, that could be on the radar. Looking to poke holes in the bullish sales here. If we jump into something that's a little bit more near term here, what the stock is, a while after gapping up, we did have some kind of stepping up as we see, but it's found some resistance at around 370, and then again on the new highs that we've been seeing. We do have a double top forming here. It's not been confirmed yet, but the stock has resisted kind of going into further price discovery mode, and we can see that if it continues to fall, we've got some momentum that might be pulling off, and there could be a pullback in the making.
Okay, now it's time to get rough with each other. 3 minutes to counter, and you both have said they're holding back. They got some new stuff to lay on us. Take it away, Brian.
All right. Well, I didn't even see that double top. Maybe because they have the bullish side. I'm blind to it. But I think you made some good points on the fact. I think that's something in the industry overall, that there could be a pullback on some of these huge companies. They're very concentrated in these large companies. I think one thing that AVGO or Broadcom has going for it, it's not a flamingo company. It doesn't stand on one leg, right? It's got multiple legs that it can stand on. It has the custom silicone. It's got networking, interconnects, and software infrastructure. So that is a big part of their business, which with VMware, I think it's a wide moat company, in my opinion. It's something that if you look at some of the numbers, they had revenue of $12.2 billion in fiscal year 2024, which is a 220% increase just for the AI revenue, which is basically kind of more VMware based. If they didn't have that, they wouldn't have been nearly as good. But their total revenue is still $51.6 billion. So it's only roughly around maybe 25% of overall revenue.
Sure, they might not all be AI related, but when we're talking about their other assets, they're underperforming, right? If we take a look at the recent performances, we're talking 5% year over year in terms of the revenues. In Q2 was down, and Q3 suggested weakness on all non-AI related fronts. But I do want to bring it back to something that kind of jumped out to me, which was how leveraged this company is. Now, a lot of it is from acquisitions that they've made. Sure, VMware was a big expense they needed to cover. They're now sitting on the reports coming out anywhere from $65 to $70 billion worth of debt. And we look at it from a debt to capital perspective, it's 46.7%, way more than double their competitors. So this really could limit their flexibility. If I know we're kind of in an interest rate declining environment, but if those headwinds change and if inflation continues to increase, and if we have needs for restructuring of their own debt, this could really dampen their financial future.
I think you made a point that a lot of that came from the VMware acquisition, and that's like just going gangbusters right now, right? So it's killing it in terms of the revenue for them and the margins. The margins are pretty high. They're higher than AMD, a little bit lower than NVIDIA. So they've got really strong margins. They're watching their costs. So I think that debt thing is not going to be as big of an issue. Right now there's about 23 on TipRanks, about 23 out of 25 analysts have it as a buy. So with an average target of 433. So they're seeing something in there. They're not really concerned about the debt. They're looking at
yeah, right. And those margins that you speak of, sure, they can be on the high side, but they are compressing as well. They were over 42% earlier in the year, and they've now dropped down to 38%. So that's a trend that you want to continue. If you're posting margins lower and lower, guess what? They're going to compress, which makes kind of making profit harder, makes that free cash flow even harder, which can be, when we think about free cash flow, they're spending this too, because we mentioned about some of their foray off of their semiconductors into more chip-related stuff. Well, that stuff comes with high R&D budgets. We're talking last year they had an R&D budget of almost $10 billion. That's not nothing. If those investments in their future don't pay off, that's really going to be limiting, once again, more flexibility down the line of where they can go.
Jay gets the last word. Time to jump into the platform, start talking about some options strategies, potential options strategies. How could a bull possibly play this? Well,
with this particular stock, since I am on the bullish side, I'm looking at it running up potentially. I like to look at a naked put. So, I'll see if I can show on the chart here. We'll pull that up where we did have this range where I talked about earlier, where there's that long-term support of around 350. There's a support and resistance looking at around 403 and 382. So I thought I'd look just a little bit below that, outside of that, basically the support level of 382, and look at doing a put, selling a put at 370. So if I can I'll just go right to where I had the trade. So I can sell one naked put in January. It'd be about the first expiration you see in January for about $9 right now. So you'd actually collect $900. I didn't want to move that, but anyway, that's our 370 range. So anything below that, I'd start potentially losing. After that break even of about I guess it would be on this 370, it'd be 361. So after that, I'd be losing, Greg. It could potentially lose big, but it's about a 70.
You're saying naked puts. That sounds like we need to talk about the risk. Right?
They are very risky, yeah. So, but the thing I'm banking on is the fact that there's about a 73% probability it's going to stay out of the money, meaning going to be above the 370. So even if it goes below that down to 361, that's my break even, and then after that, where I have potential loss. But otherwise, I'm going to keep the $900 as long as it stays above 370. And it's right now, it's trending. It even had a new high yesterday of 407. So if it does kind of continue after earnings, continues on that upward trend, then I'll get to keep that premium.
I guess too, if this trade starts working against you, then you don't have to stay in it.
Yeah. Well, potentially you don't have to stay in it. I can get out of it. I can buy back. I might be buying back at a bit or higher price, which I would do. I would do if it starts getting into trouble. Sometimes too, you might get assigned and then buy the stock. And long term, I'm kind of bullish on it. I potentially see some bullish indications there longer term. So if somebody did this trade, they can be like, hey, I bought it a little bit cheaper than what it was at currently. But if it dropped down, you may be in a situation where it's trading higher than what you bought, or trading lower than what you bought it at, which you might have to hold on to for a long time.
If you're a
and
bull,
hopefully it
then I
comes
guess
back.
you just hold the faith. If you're a bull, you got a good possible strategy there. How could a bear possibly play it?
All right, so in this particular strategy with a bear, is one of the things I wanted to give myself a short amount of time and make sure I'm always going to be managing my risk in this perspective, right? So Brian did a great job arguing this case, and we've seen the chart has shown certainly some bullish tendencies. So we want to make sure that we've got control of if things go against us, that we're not kind of out in the wind, right? But I want to kind of go to the chart here, looking more on a short-term basis. This is a 30-day kind of hourly chart. So if we're thinking about kind of momentum and trends leading into earnings, two of the indicators that are oftentimes used together is RSI and Bollinger Bands. We're seeing that the stock price has gone outside of the band and retreated in, and we're also looking at the RSI down below. They were overbought, has come back into the middle point of the zone. Those two signs together oftentimes will be corroborating facts that we've got momentum and potentially directional change in the price, and then we can see that may lead towards this double top that we talked about earlier coming to fruition and countering the trend that we were in going in. All right, but going to the trade without any further ado, let me kind of bring that up on the chart for everybody. A trade that we could do that's going to be short term, but also keeping an eye on protecting our risk if it does go against us, would be using a bear call spread. That's a credit call spread. So we're selling a closer to the money call and we're buying a higher value call as protection if the stock does go up and against us. In this particular trade, we want it to expire worthless. We want it to expire below the 410 strike price. That's going to mean that we're going to receive and keep all of the premium that we've received. In this particular case, the premium coming in is about $3.48 when we think about the cost of buying our 420 insurance and then the credit coming in on our 410. So our max profit is going to be that $348 per contract. This is very short time turnaround as well. We've got earnings coming up this week, so this is an opportunity for us to sell premium into highly volatile earning or high volatile times, meaning we're going to be kind of increasing our premium and therefore hopefully being able to either buy this back for less of a debit, or ideally even have it expire worthless and out of the market when when this Friday's expiration comes. We're only talking about like a 5-day trade here with the opportunity to make about almost $3.50 per contract.
Now you had another box there in terms of the trade not going your way.
I do, and that's certainly regardless of how bullish or bearish you might be, keeping an eye on kind of that risk and to understanding the max loss from the trade doesn't necessarily need to be my max loss, and if mine's less, that's where you talked about, Brian, about managing yourself out. But I talked about kind of having an idea going in with spreads. The most you're going to lose if both legs finish in the money, we're talking credit spreads here, is going to be the width of that spread. So this is a $10 wide spread in this particular case, less credit you already received. So if we took in, let's say, $350, max money going out the door is $650 outlay. So you know that it's not going to be kind of a breaking the bank moment.
All right, interesting stuff there. Thanks for laying out the bear and the bull cases for Broadcom. And just a reminder to our viewers that this debate was for educational purposes and does not reflect our personal opinions about the stock. Before we move on, Brian, you want to show us how to customize the heat map?
Yeah, absolutely. So I know you bring this up all the time, Greg, on the show.
Always showing the heat map on the big screen.
Greg loves the heat map. He loves all the colors, right? So if I can share my screen, I just wanted to show it's very simple, but it's one of those things. Just if you didn't know where it was, you can add it on anytime from the very top up here. You can go from the tools and analysis. I think it's on the trading one, I believe. or maybe it's on the markets. So yeah, on the drop down, there it is. On the markets, you can grab it as a heat map. You can add it on anytime just using the plus signs. I've already got it on here. I have it on my research tab. But what I wanted to show, this is actually just one of my own watch lists. So one of the things you may not know is Greg's often showing, the indices like the S&P 500, or we're looking at the Dow. You can add any list. So anytime you ever
What a happy day when I learned I could make my own heat map.
Yes, it's amazing, right? You can create your own watch list. This is just one I call
Small
the
wins, right?
Brian's list. Yeah, the small wins make it worthwhile for sure. And you can see, I've got Nvidia, Apple, et cetera. But anything you have, if you want to recreate your portfolio or something you have as a watch list, you can look at that. But the other cool thing is you can see some pretty huge indices, and they come up where you can get a really good picture, that 20,000 foot view, right? I can go to the Russell 3000, for example. Now I can see right away, okay, some of the technology stuff and AI that we've just been talking about is more in the red or a little bit flat, kind of slightly down. And you can see in other sectors like consumer cyclical, healthcare, et cetera, you can see there's a little bit more strength in some of those. So you get a really good picture. The other thing is down at the bottom, like if you're looking at the 11 basically sectors by industry, you can go down there and then you can get a good picture of, hey, I'm interested in financial services or energy. Then you can click those and get a really good picture of what's going on. Maybe something jumps out at you, something's really down or really up, and then you can do some more research from there.
You get the size as well of the icons as well, representing like the market cap of the company, so we're able to get a comparison that way too. So.
Yeah, that's a good point to bring up. Yeah, so you'll notice in some, like if we go to, let's say we pull up the S&P 500, you can see that some of them have a massive size, and it's already set automatically to show that market cap. So you can see some of these really small companies, you're looking at smaller
Small's
cap
relative
stuff.
though too, right? So,
Yeah, true. The S&P 500 might be still a couple $1 billion market cap, but
Start getting these big tech names in the trillions.
Absolutely.
It's big money. All right. Great stuff there. Thanks for that. And if you at home have a question for our TD Active Trader team or the platform itself, questions about that, and you have some ideas, you want to see these guys fight it out on your idea, just send us an email, td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. If you scroll down, you're going to find a tab that says Join a Live Masterclass. This Wednesday, 2 p.m., Caitlin Cormier hosting an interactive session about TD Active Trader. It's going to explore all the main features the platform has to offer. Registration is required, and it's open now. Right, before we wrap up the show, we got some key things investors are focused on for the rest of the week. What is on the radar, Jay? I think I can guess the first one.
I bet you can. You tipped it off as well. And this is, these are always appointment television kind of when, or appointment watching when you've got these big announcements. But we've got the FOMC meetings happening over the next 2 days. Rate announcements coming kind of Wednesday afternoon. What is it? 2 o'clock is when we can expect that to happen. It's not much of a cliffhanger at this point in time. It went from like 40% based on FedWatch in November. Now we're up as high as like 89%, where the market's already pricing in a 25% basis point cut into that. So, but whenever Jerome Powell takes the podium, people stop and listen. The markets are going to be listening to what the projections look like. So that'll be the first thing on the radar coming up in a couple days. But on what I've got looking at in terms of earnings that we've got coming up, we've talked about them on this program before. I'm sure we'll continue to talk about them. But Costco is actually reporting on Thursday, same day as Broadcom, Thursday after the bell. All right, so a couple quick things before we get to the earnings, both kind of tariff related. Costco became one of the highest profile companies to sue the Trump administration over tariffs. They're challenging the authority to use emergency economic powers, but most importantly, I think it's about preserving their rights to reclaim their tariffs if the Supreme Court does rule them unconstitutional, and to make sure they're keeping their liquidation window open, so it makes it easier to get that money back from Customs and Border Patrol. So that's that. And tariffs paid by Costco, they've not released how much they've paid specifically yet, but more and more the industries are warning about the looming kind of price increases that we're going to be expecting to see kind of in through 2026. Now we've got a cloud hanging over the retail. Thanksgiving was more than just a time in the U.S. just to get together, where people were pretty jubilant about how they saw shoppers, flooding to the stores and to malls and things like that. But we got other retail CEOs, from Kohl's, Abercrombie, Williams-Sonoma, just to name a few, they've already started to alert investors to kind of higher prices that are coming. But turning back to Costco just briefly here, they're expecting earnings per share of $4.24. That's up 11%, and then revenue, we're more billions here, $67 billion. That's up 8% year over year. So some big things, but the things that all retail stuff we're looking at same store comparables, and then Costco's really looking to make a dent in the e-commerce space. So we're looking to see those numbers when those get released on Thursday. But let's take a look at the chart now. Just sit back and kind of marvel what we're looking at. This is a 30-year chart.
That's 30 years of Costco.
We oftentimes don't get to see this, but we can see it's on quite the bull run. Now things have started to change. You can kind of see where we've got near-term prices have really started to kind of peak out, and we've got a bit of a diamond forming there. But if we kind of go in and look at shorter term, let's bring that into a more visible manner here. Let's go. We can see that we've got a bit of a triangle pattern forming where we've got, after we peaked at almost $1,100, there's been lower highs that have been appearing for us, and what we had also was a head and shoulders pattern that formed. That head and shoulders pattern can if it does, we've broken through and confirmed breaking through the head and shoulders, but if that continues down to its full measured move, it's projecting the price can go as low as $750. Now that may take time. The longer the pattern takes to kind of form, the longer we can take to see those moves take place. But there's some other ominous signs that are happening here too. We had a death cross that happened, earlier in the fall. That's when the 50-day average crosses over the 200-day average, crosses below, to be more specific. So that's one thing that many observers are looking at in the market. And I'm seeing when we are seeing some of these red days, they happen to have big candles, meaning that there's certainty, there's pressures in the market. They're closing closer to their lows. So big day on Thursday. Costco's, it's almost like a staple where people seem to need to go to kind of fill their cupboards. But the prices have been backing off this bullishness that we've seen over the past decades over in the market. So.
On my parents' dinner table on a Sunday, my mom will always tell you, that was from Costco, from Costco. And take one of those 17 loaves of bread, because we got those from Costco too.
Oh, yeah. My wife's going to be angry if the paper towel prices go up.
Okay, with the holidays coming up, you can have paper towels under the tree, but also maybe some Lulu?
Yeah, some Lululemon. So I wanted to highlight that, not only because it has earnings on Thursday as well, because our colleague Hiran, he just never stops talking about his breeze-through leggings. He loves those.
You get messages at 3 a.m. on the app, and so what are you doing?
Yeah, should see what they have at Lulu. But yeah, if we run to the charts, it's interesting because the analysts are a little bit mixed on it. They're kind of have it as a hold at the moment, but the charts are seeing some pretty good strength more recently, so it'll be interesting to see what will happen at earnings. So you can see here, I like to see things where there was a cross of a 21-day moving average across the 50-day just prior to earnings. You can see that on the screen. And then a couple other things that I was looking at was there was a double bottom more recently, which is usually a fairly bullish signal, where you can see it did have a bit of a price above this higher level, like this middle line. We saw it go above there, so that could be potentially an indication of some bullish price strength. We don't know for sure until the earnings is going to come out. But then lastly, we did have, if I look at support and resistance, you can see in here they've kind of hovered around to see if the price moves past that resistance at around $200 after earnings, and it got close more recently. So I think if it does jump up there to some previous, previous support up to a new resistance, if it jumps above that, that could be, we could see a price run a little bit, Greg. Or it could even bounce off of it and go downward if earnings aren't the greatest. But it's one that'll be interesting to watch on Thursday.
Always interesting stories around that one, guys. Another great show. Always great to have you here in the studio with us, Brian.
Yeah, my pleasure.
Jay, next week you'll still be in that chair, but
still in this chair, doing my own thing. Yeah,
you got to keep.
And Hiran will be here with his leggings.
He's not here to defend himself, so that's what you get, buddy. That's our show for this week. As always, investors should perform their own due diligence before engaging in trading. We're back on this Thursday, 10 a.m. Eastern Time. Our guest is a renowned economist and investment strategist, Ed Yardeni. We're going to get his take on the Fed decision and what it means for the markets, for investor sentiment, trading strategies, lots of stuff. You don't want to miss it. Thanks for watching this one. We'll see you on Thursday.